Hey friends and family, in light of what you guys have been seeing in the news about these banks shutting down and everything, I believe I have a moral obligation to share something with you that's really going to help you guys have better options for yourself and for your family going forward. So as some of you already know, I've kind of been around the block when it comes to financial services. After graduating university with my bachelor's in business administration, concentration in finance and economics, I've seen a wide array of different financial services. I've worked for a lot of major companies, helping a lot of clients manage money and everything like that. So, and this has all been going on for the better part of a decade. So in light of these recent bank shutdowns, the question that I've been getting a lot of from my clients are, what other alternatives are there, if any, to store my money besides using a bank? So in this video, you're going to learn about a superior alternative to a bank account. First of all, regardless of whatever mainstream media is saying about like how bad things are, oh, the sky is falling, first thing you need to do is don't panic, okay? Things are not nearly as bad as they were even in 2008. And even since the 1930s, after we had the big Great Depression and a lot of banks really did go under and people really did lose a lot of money, during that crisis in the 1930s, since then, the numbers don't lie. We've never had a situation bad enough where depositors have lost money from a bank going under. Now, the reason why we haven't had any major banking issues that resulted in depositors losing money since the 1930s is because thankfully we learned our lesson and we put in a lot of safeguards. Okay, for example, if a bank goes under and if hypothetically a bigger, stronger bank cannot acquire them for some reason, which happens 99.9% of the time, then at least the FDIC will step in and ensure that everyone's deposits are made whole up to $250,000. Not bad. So of course that implies that anything over $250,000 that you have in the bank is potentially not covered by the FDIC. Okay, so keep that in mind. Even if you're under $250,000 and assuming that banks continue to do their job and everything's good, there are still some risks that you need to be aware of if you or your family are using banks as your primary storage vehicle for your financial assets. The biggest risk that you need to be aware of when it comes to using a bank as your storage vehicle for your profits is the fact that not only the banks, checking accounts and saving accounts and CDs, and a lot of these other asset classes that you see here, these asset classes, including banks, are what we call accessible. Repeat after me, accessible. What being accessible means to you is that the growth from interest, dividends, and also some of the transactions that happen within these asset classes are automatically reported to the government and to creditors. So what that means is that, God forbid, you rub the government the wrong way, the IRS or creditors, if you do something wrong, you owe them money, they can legally freeze, seize, or place liens on these various asset classes. It's pretty rough.
What the did I do wrong?
Some of you know exactly what I'm talking about. Some of you watching this video have had liens placed on your real estate portfolio, okay, by creditors or by the IRS. So this means like even if you have profits from real estate, when you go to transfer that to your heirs or when you liquidate it, all of that profit or some of that profit can be wiped out. So the bottom line is we have to ask ourselves, where can we put our hard-earned money where it's safe from these financial fluctuations and meltdowns and also safe from these financial predators out there? Do you want to put it in crypto, which, as you know, has had massive losses in the recent year? Do you want to put it in the stock market, which, has its ups and downs, but it lost about 18% last year? Or do you want to keep putting it in the checking or savings accounts. But now you know, even when it's there, it can be potentially seized or frozen by the government or creditors. So again, ladies and gentlemen, I ask you, where can we possibly put our hard-earned money where we can earn the highest growth with the least amount of risk? That is the multi-billion-dollar question. The answer, ladies and gentlemen, is actually found here in the US tax code. If you look up 7702 of the US tax code, go to the IRS.gov website, they are describing a very special asset class that allows us Americans to put as much money as we want into it, take the money out at any time we want without taxes or penalty, all the while it's growing at a guaranteed rate of return, completely tax-free, and most importantly, it's non-assessable. Again, non-assessability is the most attractive characteristic of this asset class. That means no one else needs to know about it besides you and the company that holds it legally. Okay, that's why we talk about it in section 7702. Okay, that means the IRS can't touch it, creditors can't touch it, ambitious litigators can't touch it, even disgruntled exes can't touch it. It's really great. And it's backed up by these massive financial institutions that have been around for a really long time. Some of these financial institutions are even older than the United States itself, if that says anything, okay? On a funny side note, this is actually the asset class that Bruce Wayne used to retire. You guys know who Bruce Wayne is, of course, you know, multi-billionaire, playboy, Prince of Gotham, AKA the Batman, okay? I hope you saw the movie The Dark Knight Rises, where in that movie, Bruce Wayne actually has a lot of his wealth completely wiped out by his arch nemesis, Bane. They crashed his investment portfolio, even to the point where they forced him into bankruptcy. It was crazy. But yet, later in the movie, we see him cruising the world with his boo, you know, eating at the most exclusive restaurants, just living the high life, chilling like a villain. How did he do it? He leveraged section 7702 of the US tax code. So while he was growing up, his parents and his financial advisors of his parents were allocating every quarter or every year a portion of the Wayne Enterprises profits into this section 7702 asset class for Bruce, okay? Because they knew that if, God forbid, all hell broke loose and they lost their business and they lost all their investments, at least their family and their generations, their progeny, aka Bruce and Alfred, would still have plenty of wealth privately tucked away for generations. So yes, this asset class can easily survive bankruptcies and major financial meltdowns.
Well, that's a good thing I left everything to you then.
Quite so, sir. And you can borrow the rolls if you like. Just bring it back with a full tank.
So without further ado, ladies and gentlemen, boys and girls, binaries and non-binaries, the asset class that I'm referring to is none other than life insurance. I know. Okay, you're welcome. I know, I'm sorry for all the suspense, but there it is. It's life insurance. Specifically, it is permanent life insurance that's been max funded in compliance with section 7702 of the US tax code. Now, to clarify, you cannot take advantage of section 7702 with a term life insurance policy. And I know a lot of the gurus out there say buy term and invest the difference. And listen, that is a decent financial strategy, but understand that strategy is only 2/3 of the solution to creating generational wealth. You know, if you think about it, after you've bought your term policy and invested into the capital markets or into businesses, and Lord willing, you make a lot of profit, you make a lot of money. You have to ask yourself, what am I doing with all of these profits? Where am I putting all of this money that I made? Novice investors will continue to take all of those profits that they made and reinvest them back into the accessible, non-guaranteed, fluctuating asset classes where they can potentially be wiped out at any given time.
I got a $100 check from my grandma, and my dad said I need to put it in the bank so it can grow over the years.
Well, that's fantastic. A really smart decision, young man. We can put that check in a money market mutual fund. Then we'll reinvest the earnings into foreign currency accounts with compounding interest, and it's gone.
However, the multi-billionaires of this world, the Warren Buffetts, the Michael Jordans, the Rockefellers, the Oprah Winfreys, they are people who not only buy the term policy as a temporary safety net, and that's cool, but also they're investing into their businesses, they're investing into the capital markets, and after they make all of these profits, they're allocating a portion of those profits into their permanent life insurance policy plan, where it's completely safe from market fluctuations and financial creditors. Now, when they do this, they're always in a position of strength, even when their businesses or investments fail. Okay, this is why people like Warren Buffett say, when there's blood in the street, it's time to eat. Not exactly like that, something like that. I like my version better. But they say this because while other people are losing money in the crypto markets, Forex, options, stocks, real estate, etc., those of us who have a properly funded permanent life insurance policy are always in a place where we have plenty of money to work with, where we can take some of that money, buy low while these other markets are down, so that we can buy up a bunch of property, buy up a bunch of assets, and then inevitably these markets recover, okay? And you can sell high with a massive profit. And we find ourselves in a place yet again where we can allocate a portion of those profits back into our permanent life insurance policy where it's safe. And you can see this kind of looks like a circle, right? So what do I call this? This is called
It's the circle of life.
You do this enough times throughout your life and you find yourself in an amazing place. So that, ladies and gentlemen, is how you really play the money game the right way, okay? So that you and your family, your loved ones, can safely grow your family's assets, preferably within the context of a trust, to potentially billions instead of millions. Lastly, the best part of the story is actually at the end, because we can't take all of that accumulation with us, right? Well, guess what? This is still life insurance, remember? So when we do pass on, all of this accumulation is passed on smoothly and cleanly to our beneficiaries of our choice. Preferably, again, our trust, okay? But it's skipping probate, which is a lengthy and expensive process, and most importantly, it's skipping a ton of taxes. And so I have to reiterate, this private tax-free transfer of wealth is the secret key to generational wealth creation. So I know this sounds really good, and it is really good. It's been around for a long time. But some of you still may be thinking, oh, this is not for me. This is too expensive. This is something that only millionaires and billionaires do. This is not something that I need. Well, actually, quite frankly, that's not the case. Any Joe Schmo with $100 to blow can do this. So if you're already able to save like $100 a month in your savings account, that's enough to get a basic plan started. And now others of you may be thinking that you can't qualify for a life insurance policy on the basis of your age or health. And that's a valid thought, because quite frankly, this is the only asset class in the world that requires you to qualify for it on the basis of your health as opposed to your wealth. So if that is the case, where you're not in the best health right now, or you're over the age of, say, 65, then an option we can explore is you owning the policy on a younger, healthier relative, whether it's a spouse, a domestic partner, a sibling, a child, or even a grandchild, so that you can still benefit from this asset class. With that being said, I really hope and pray that you found this information to be helpful to some extent. I strongly encourage you to reach out to your licensed life insurance agent, broker, or wholesaler like myself. Because if you're already working with a great agent, continue to do so. Just let them know that you would like a permanent life insurance policy that's been max funded in compliance with Section 7702. They'll know exactly what you're talking about, okay? But if you would like to work with us here at Right Life Group, you can reach us directly at 1-800-949-4870. We have agents standing by. But wait, there's more. Okay, when you do schedule time with us and we chat, we will go ahead and send you the infographic. It's called an infographic. It's the growth to risk spectrum chart that you saw. Yeah, we'll send that to you as a complimentary gift, a token of our appreciation for your time, okay? So we wish you well, take care, and God bless.
Right Life Group. Protect your legacy, enjoy your life.